Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's June 17th. Just a couple economic news releases scheduled for today. We will start off with the Consumer Price Index, also known as the CPI. This is the Consumer Inflation Gauge, one of the bigger indexes. This and the PCE. So back in March, we had a 0.3% increase. Excuse me, 0.3 increase. We thought the forecast was dipped down and it actually jumped upwards. So pretty big spike there. So 2 months in a row, we had a bigger than normal spike in inflation. So, and then when you strip out the food and energy, we get the core CPI. And this is really what the Fed looks at in terms of inflation numbers because of the volatility in food and energy prices. So we had a 0.2% back in April, and then forecast is supposed to remain at 0.2%, and it jumped up to 0.3%. So couple months, at least 2 months, consecutive months that there was a bit of a spike in the in the inflationary numbers. So this is something definitely to keep an eye on as this could change things around pretty quickly. We've talked for a while there regards to at some point we're going to see inflation rear its ugly head, which was kind of inevitable with the government spending so much money into the economy, buying the bonds and everything else to try to stimulate the economy. At some point, it's going to spike up. Maybe this is the start. It's a little early to tell, but maybe it is the beginning. So this is going to spook investors as a result because if we see the climb in this spike in the inflation, they're going to wonder if the Fed's going to start tightening up on policies sooner than they expected, which they're figuring maybe raising interest rates late next year. Maybe they might move that up to help curb off the inflation getting out of control. Housing starts back in May. April we had a million, and then the forecast is supposed to go up to 1.02 million, and it jumped up to 1.07 million. So a decent start right there. Better, nicer improvement, better than expectations. So the stock market's a little mixed with this news. They are kind of pushing out the news for the Iraq, even though the U.S. is sending like 276 soldiers over there protect U.S. interests. But also today is the beginning of the FOMC. So tomorrow we'll have their announcement. The Fed is meeting today. This will be an important meeting. July will probably be a little bit. The next one will probably be a little bit more important because it will give us a gauge as to we'll have this Q2 quarter information as to the GDP. So we'll start seeing that information, and it will give us a gauge as to what the Fed is going to be saying once they see the second quarter information out there, if it's going to be better than expected or less, these type of things, or how, because remember we had a bad first quarter. We want to see if the second quarter is vastly improved or how much more improved. So lately we've been seeing some good numbers in the second quarter, so I would anticipate a decent second quarter number here. So let's go ahead and run over to the bond market, see what interest rates are doing. We had a drop from yesterday, as you can see, a pretty big drop. So pricing has worsened a little bit today. In terms of interest rates. So interest rates are pricing wise is a little bit worse than what we left off yesterday. All right, so remember tomorrow there'll be some volatility with the FOMC announcement. Janet Yellen will be giving her speech or announcement usually later in the morning Pacific Standard Time, but by 11:15 is typically when it's delivered. So I expect some movement in between to kind of rally as to where they think it might be, and then afterwards after decipher the message that's being presented, where they think things are going, and then you'll see some volatility. Even the next day, we'll have some kind of a correction in there, and then Thursday we'll have the weekly jobless claims, and then Friday will be kind of a quiet day here. All right, folks. Hey, thanks for watching. I hope you guys have a wonderful day coming up, and hopefully this is give you a little insight as to what's going on with the interest rates. And we'll hey, thanks for watching. We'll look forward to seeing you guys tomorrow. Take care.